Hey, welcome back to the channel. If you're new here, my name's Simon and I make videos to help new and struggling traders cut the noise, build discipline and actually improve without all that hype. Today, we're talking about something that trips up nearly every beginner at some point. Signals, trade ideas, copy and paste trading and how it clashes with self-worth and the law of probabilities. If you're someone who's ever thought, why can't I get consistent, then this one is definitely for you, so stay tuned. So take a breath, settle in. This is going to be straight, practical, real and raw. Let's start by being honest. When you're new, charts look like mission control, candles flying, indicators blinking, folks online talking like they've cracked the Da Vinci Code. It's overwhelming and I want you to know I completely get that. I totally understand if you're someone who feels that way. So a person pops up and says, don't worry about learning, just copy my trades. Now, in a world of Uber, Deliveroo, and next day everything, that feels quite logical, right? Convenience is everywhere, it's the world we live in. So why not here in trading too? And at first it works, or at least it feels like it does. You copy a trade, it wins, you're experiencing this dopamine hit, you think sorted, I'm a trader. It's like putting on gym gear, taking a selfie and convincing yourself you've burned 500 calories. Feels right, but nothing has actually happened. Do you get my point? See, signals don't give you context. You don't know the why, the risk, the bigger picture when a loss hits. And losses are part of every system. Your emotions are all over the shop. Do you keep going? Do you double up? Do you switch signal providers? See, you've got no framework. I'll tell you what it is. It's basically outsourced guessing with someone else's confidence pasted on top. And even worse still, signals block skill acquisition. Like copying answers on an exam. You might pass once, but the next paper, you're lost because you never really studied or learned the material for that exam. See, dependency, it's not a trading plan. So here's the cycle most people go through when they're new. You join a signals group, copy and paste, whatever you want to call it. You win a couple, you feel great. You take a loss and you panic. You blame the provider and leave. New group, same routine. Months later, less money, less confidence. And that last part is the real damage, not the lost money. It is the loss in belief. This is the bit nobody selling shortcuts, signals, trade ideas actually wants you to hear. Trading is a probability game, not a certainty game. Any decent strategy is an edge. Something that over a large sample of trades, it tilts the odds in your favour. That's why we call it an edge. Suppose you trade a setup that wins around 4 times out of 10. The important thing is not the individual win or loss, it's what happens over a larger batch of trades. The average win compared to the average loss is what gives you your expectancy, your edge. Over one trade, come on man, anything can happen. Over 100 trades, you get the data, the math starts to reveal itself. Real life isn't tidy. You'll get clusters of losses and wins. You might lose 5 in a row. It's happened to me. And then you catch a good run. And now if your risk is controlled, the math will still carry you. But signals, you've no idea what the true win rate is. No idea of the average return. No idea whether you're even taking a consistent sample of trade ideas from the provider. You hop in late, you skip some, over leverage on others. You're judging a probability game like it's a single coin toss. Tell me I'm wrong. Think of it like a loaded coin that pays you more when it lands one way than when it lands the other. Okay? Flip it a few hundred times with discipline and you'll likely come out ahead. Flip it 5 times just randomly while changing the bet size because you're annoyed. And yeah, good luck with that. Consistency comes from process and sample size, not from cherry picking other people's entries. It really doesn't. Okay? Signals give you no defined edge that you actually own. Maybe the provider has an edge, you don't. No fixed risk model. You're guessing lot size off good vibes. No sample integrity. You miss trades. You take late ones. You jump between signal providers. No feedback loop so you can learn. You can't improve what you can't measure. It's like scoring someone else's football match and wondering why your fitness isn't improving, because watching isn't training. And here's the uncomfortable truth. Self-worth. If you truly value yourself, you won't outsource your future to a Telegram ping on your phone. Come on now, let's get serious. A trade is not just an entry and exit, it's a reflection of your standards, preparation, patience, risk, review. And when you say, oh, I'll just copy, what you're really saying is, I'm not worth the effort of learning this properly. Ooh, ouch. Now flip that. Say I am worth the skill. I'm willing to be the person who learns. Because the sense of achievement when you've battled the highs and lows and come out consistent, that's not just profit. That's your identity right there. In the Navy, we used to say, slow is smooth, smooth is fast. You build the habit correctly at a deliberate pace, then speed becomes a byproduct. And trading is exactly the same. The fast way is actually the slow, methodical way. If I had a student in front of me who'd been living off signals, here's what I'd say and do in week 1. I'd ask them to show me the last 20 trades. They'd probably show me screenshots with no notes, and then I'd ask, why this entry? What was the risk? Where's your plan? And you know what comes next? Silence. Because they never owned the process. Then we'd pick one pair for one session, one setup. The risk would be 0.5% per trade while learning, as an example. Build a checklist for entries and exits. Start a journal that captures both the chart and the feelings. And the goal for month 1 is not to make money, right? It is to collect 50 trades under one rule set. So we can see the probabilities start to show up. Right, this is us now collecting the data. Now here's how that journal looks. Pair, session, date, time, setup name, checklist, structure, liquidity, confluences, time, entry, stop loss, target, risk percentage, emotions before, during and after, outcome written simply, win, loss or break even, one line lesson. Do that 50 to 100 times and you'll learn more than a year of pinging signals. Because you'll see your data, your patterns, and your own personal weak spots, what you see. See, backtesting, it's not fancy, it's just reps. Pick one setup you like, scroll the charts bar by bar, mark the clean and the messy examples. Track the win rate, the average return, the biggest drawdowns, the streaks. Calculate your expectancy. Note your weak discretionary points. Tighten the rules. After 100 samples, you'll know things like this setup averages a certain return per trade with a win rate around half and usually has a string of losses now and then. Now you're playing a probability game with real numbers, and that is grown-up trading. It's the difference between trust me bro and here's the difference. Now you can't talk probabilities without talking risk. If you blow up during a routine drawdown, you never get to the long run edge. So picking a risk per trade you can emotionally handle, I don't know, 0.25% to 0.5% while you're still learning is absolutely solid. Know your expected losing streak. A system with less than half a win rate can still see half a dozen losses in a row. So plan for it. Keep position sizing fixed while you learn. Don't yo-yo risk because you're annoyed or excited. Rule of thumb. So here's your rule of thumb. Your account should survive at least double the expected worst drawdown of your system without you changing your rules. Write that one down. In fact, make notes on it all. Now, people are going to throw objections at this, but signals teach me what good entries look like. No, they show you pictures of entries. That's not the same as teaching you the process. If you want to learn, take an idea and build your own checklist and statistics around it. Here's the other one. Oh, I don't have time to learn. Yes, you do, but you're spending it in the wrong place. 10 minutes copying trades with no learning is wasted time. 30 minutes journaling and backtesting 3 times a week will change your future. And the other one is, well, what about copy trading? It's automated. Well, yeah, but it still requires you to understand risk, drawdown, and whether the signal provider's edge matches your risk tolerance. If you can't explain their strategy in one simple paragraph, you are flying blind, my friend. Or we can look at, well, can't I use trade ideas to spark the learning? Yes, if you treat them as a case study, recreate the idea on your chart, write your reasons, log it, and see if it fits your system. See, the key is ownership. So here's a 30-day plan to get off the signals treadmill. Week 1, Audit and strip back. Unfollow or mute signal pings for 30 days. Pick one market, one session, one setup. Create your checklist and your journal template. Have a fixed risk at around 0.5%, maybe even a quarter. Week 2, I want you to backtest 50 trades, 2 focus sessions, get 50 historical examples, log the win rate, the average return and the losing streaks. Tweak the rules where ambiguity keeps biting you. Week 3, live simplicity. Trade only your setup, only your session. Journal every trade in one sentence if needed. And at the end of the week, review for process mistakes, not outcomes. Week 4, review and decide. Total trades taken, win rate, average return, max drawdown. What broke your rules, fix the environment, and then decide you either keep it, refine it, or you absolutely just park that setup completely. In 30 days, you'll know more about your trading than a year of copy and paste, believe me. Now, routines. Pre-market brief, 10 minutes, higher time frame bias, key levels, news, plan A, plan B, on-session rules, max trades, max risk, no impulse entries in first 5 minutes, post-session debrief. 1 win, 1 loss, 1 lesson. Weekly review. Tag every trade as A, B or C quality. What does an A look like? Do more of those. So you train like you fight. If you're sloppy in practice, you'll be sloppy live. I think we can agree on that, right? So here's a few more analogies for you. Microwave versus the slow cooker. Fast heat versus slow flavour. GPS versus map reading. GPS gets you there until it doesn't. Paying someone to eat broccoli for you still makes you unhealthy, right? Here's a simple skeleton that you can use for any strategy. Higher time frame, trend or range, key level identified, liquidity story, who's trapped, where's the fuel, trigger, your clear pattern, fixed risk, stop where setup is invalidated, not where it feels nice, targets pre-planned or to the next higher time frame level. Now let's take a look at management, a rule you can write down. Journal, screenshot pre and post with 1-line lesson. What was the lesson from that trade for that journal? Plug your strategy into that skeleton and you've got a repeatable process you can judge by probabilities. Probabilities. Keep repeating that. Probabilities. Mindset checkpoints to read out loud before trading. One trade means nothing. My edge plays out across many. My risk is fixed. I don't earn the right to size up with feelings. I will grade my execution, not my profit and loss. Missing junk setups is a win. These lines sound simple, and I know they do, but they anchor you to the probability game, which is what trading is all about. See, at some point, you have to make a decision. Are you going to be a spectator in your own trading or the person who's willing to learn the craft? See, self-worth is not a hashtag. It's a decision you make daily to prepare, to risk small, to review and to improve. And when you do that for quite a few months, the results do catch up. And when they do, the confidence is earned, not borrowed from someone else's Telegram signal channel. And that's a good feeling. It's not flashy, it's not hype, it's just steady and it's yours. You've put the hard work in and you deserve it. Can signals or trade ideas ever be useful? Only as a study aid. Treat them like case studies. Rebuild the chart, write your reasons, see if it fits your rules, then log it. If it doesn't fit, bin it. If it does, you didn't need the signal anyway because you had the process. But if you're relying on them to tell you what to do, that isn't trading. Let's not kid ourselves here. It simply isn't. That's outsourcing responsibility because you can't be asked, and nothing good grows from there. So here's what I want you to remember. Trading is probabilities, not certainties. Your edge shows up over many trades with fixed risk. Signals block the feedback loop you need to grow. Where's the data? You're not getting data from signals. Your self-worth shows in your standards and the process. And the only convenient way is to learn the skill. If this hits home, by the way, leave a comment below. Have you ever been stuck in the signal cycle? And ask yourself, what's your plan for the next 30 days? Subscribe if you're serious about cutting the noise and building discipline. It would really help me get this content out to more people who need it, new and struggling traders. And if you are someone who wants to learn this skill the right way, then go ahead and click the link in the description below. You can come come and book a call with us here at The Sovereign Trader and we'll see whether we can help. No pressure. Thanks for tuning in and I'll see you in the next one.